Beyond the Bell, Bloomberg's comprehensive cross-platform coverage of the U.S. market close starts right now.
And right now, we are 2 minutes away from the end of the trading day. Romaine Bostick, Taylor Riggs, Sonali Basak in for Caroline Hyde, counting you down to the closing bell. Here to help take us beyond that bell, our global simulcast, Carol Massar, Tim Stenovec, bringing together our Bloomberg Television, Radio, and YouTube audiences to parse all of these moments of the day here. And look, I mean, we're at the point now where we're actually quoting Dow points, so you know it's serious.
It's a big deal. Romaine just did it, and I almost fell off my chair.
Yeah. But percentage always give you perspective, right? The Dow is 34,316, so now we're down about 1.6%. So we need to put it into perspective here. The question seems to be, again, we focus on the bond market and the move in yields higher, and we need to ask ourselves, what's causing the move up in rates, Tim? Is it inflation? Is it optimism over the economy and the recovery? Is it central banks increasingly turning more hawkish, or is it a little bit of all of the above?
Well, Jimmy Lee, the founder and CEO of Wealth Consulting Group, who we just spoke to, said it was a little all of the above. If we take a look at the S&P 500, Taylor, it looks like we're going to finish off of session lows, but still down more than 2%. I was wondering if there was going to be some buying. It did happen at around 2 o'clock today. It went into the 3 o'clock hour, but not enough to make it move higher significantly.
You know, Tim, I think that actually brings up a really good point. We were speaking with Amy Wu Silverman here, the equity derivative strategist over at RBC. And Sonali, she had a really good point that typically you do see some of the retail investors come in. They weren't as much. What she said is you're just actually going to be more capped to the upside. You're going to get less of that downside skewiness to the left when you think about days like today in that retail trader.
Yeah, it's interesting what she had to say, too, about people not rushing to those hedges in a market like this. So, you know, where is the incremental buying here? Where is the protection?
All right. Look, we're getting these closing bells right now. We should point out the low of the day right now on the S&P 500 was 43.46 and change. It looks like we're going to settle right now somewhere around the 43.53 mark as we wait for these numbers to sort of play out, but roughly down about 90 points or 2%. This will be an official 2% decline on the S&P 500. We'll have to look for the superlative on that, but it's been a while since we've seen this type of drawdown, particularly over a 2-day stretch here. The Dow Jones Industrial Average, I'll give it to you in points, folks. 569 points, 570.
Feels like a lot.
Round up, 34,299. If you're into percentages, that's about 1.6%. The NASDAQ down 2.8% here. And I think when we talk about the idea here that some of those long duration trades, the idea that as bond yields rise, you get that erosion, that potential erosion of future earnings. No more is that reflected than what you're seeing in those large cap tech names. But then look, you look at the Russell 2000, you're not really getting any support here from the small and mid caps. The Russell down about 2%, more than 2% here on the day, 2.3% here on the day, Carol.
Well, here's our superlative, our red headline, as we like to call it here, red sticky on the Bloomberg. S&P 500 posting its biggest sell-off since May. I like a little bit of perspective, and a few minutes ago took a look at the S&P 500. It's down more than 4% from its September 2nd high, all-time high. Dow down about 3.8% from its mid-August high. NASDAQ 100 down about 5.7% from its early September high, and those small caps remain. Russell 2000 down about 5.5% from that March high.
And the big question here, Carol, going forward is really now this does become less of just about an economic story, but more of an earnings story here and how companies are able to navigate through this. We're getting earnings out of MICRON right now, of course, the big chip maker. They're providing a little bit of an estimate here. This is for their fiscal fourth quarter here. Their fourth quarter cash flow from ops coming in at $3.88 billion. That's below what the street was looking for, of $4 billion and change here. Adjusted EPS at $2.42. That's a beat. The street was looking for, on average, about $2.34 here. Going to try to parse through some of these other numbers here, but they're kind of trickling out slowly here. But you get the gist of it here right now. A lot of folks really paying attention to not only on whether there are earnings, but also on those margins, on those gaps.
Yeah, that fourth quarter cash flow from operations, $3.88 billion. The estimate was for $4.05 billion. We had an interesting conversation with Gina Martin Adams and saying that, no, we're not really seeing revisions when it comes to revenue, the top line growth when it comes to expected earnings. But if you go inside the balance sheet, whether it's increased costs, whether it's supply chain disruptions, you are seeing that increasingly eat away at a company's earnings. And you do have to wonder about that cash flow. What does that mean for Micron specifically, Tim?
Yeah, well, the company's CEO out with a statement, quote, Micron's outstanding fourth quarter execution capped a year of several key milestones. In fiscal 2021, we established DRAM and NAND technology leadership, drove record revenues across multiple markets, and initiated a quarterly dividend. The demand outlook for 2022 is strong, and Micron is delivering innovative solutions to our customers, fueling our long-term growth. Shares of Micron bouncing around in after hours. We're down as much as 7%, now down 5%.
Taylor.
Yeah, you know, Romaine, it was such a big day within the equity markets. As we parse through some of the language of that press release in Micron, let's just revisit really where we were today within a day, as we were seeing some of the worst sell-offs that we've seen since May. And Carol, this is interesting, as we usually do for the sector winners and the sector losers. There's only one sector in the green. That really highlights the broad-based sell-off that we saw today. Energy is it. It's only up 0.5%. Everything else in the red. So I'll take you through. It can sort of be a bond store if you want. Banks, utilities, materials, as the reflation trade sort of falls apart today. And really down at the bottom, we've been talking a lot about Micron. It's software, it's media, it's semiconductors, Carol. Those are the worst performers. You're 3 to 4% lower on the day.
Seeing Western Digital also on that Micron news down about 2.25% here in the after hours. All right, finding losers was pretty easy. We'll get to that in a moment with Tim. But gainers, it was pretty tough. Schlumberger, Taylor just broke it down. Energy, that was the outperformer in today's trade. And we saw, take your pick. Natural gas futures, we know, were up for a second straight day. They surged in New York. You saw Brent oil soaring to above 80 a barrel. Let's look at Schlumberger. That was up about 2.4%. But again, take your pick. Halliburton, Cabot also among some of the gainers. Hewlett-Packard was also top among the S&P gainers today, rallying after gaining about 4.5% yesterday. It is up nearly 10% in the past 5 days. It was up another 1.3% today. Hard to find news, but B of A held a conference call with the company's CEO, HPE, saying it plans to add analytics data protection services to its GreenLake cloud platform. So again, more cloud news. One more name I want to mention, Teva Pharmaceutical, rallying about 4% today after the company said its U.S. affiliate Teva Pharmaceuticals reaching an agreement with the Attorney General of Louisiana to settle the state's opioid-related claims. They're going to pay about $15 million, do a few other things, but again, settling some of that legal mess that is out there when it comes to opioids.
Yeah, still continuing to see that play out. You had the gainers, I had the decliners. Very easy to find a handful of those. Let's start with Applied Materials. AMAT shares finishing the day down close to 7%. New Street Research downgraded its view on the semiconductor capital equipment sector to neutral, citing valuation. New Street Research tactically downgraded AMAT from neutral from buy. It has a $140 price target on the stock. In after hours, it's just moving fractionally right now. Moderna also finished the day down more than 6% today. It's down for a third day in a row. This is because Sanofi announced a positive study of an mRNA-based COVID-19 vaccine, but it said it's actually not going to pursue this vaccine, but it does remain more competition in the space. Peloton also down off of Amazon news more than 4.6%.
And the weakness that you're seeing, of course, in a lot of the semi stocks that we saw today, and presumably if those moves in Micron holds into tomorrow, we could see that again. I did just want to point out, though, real quickly, Carol, we talk about the superlatives on this day before we get to the yields here.
Yeah.
This 2% decline, I mean, this is pretty rare. I was just counting them up. This is only the fourth time this year that we've had a 2% down day on the S&P 500. And there's only been, I thought that was interesting, only been one day higher by 2% here on the S&P 500. So this is a pretty outsized move. Of course, you compare that to some of the wild swings we saw last year, but at least as far as this year, you just really haven't seen this.
Well, it's a changing dynamic. And if anything that's changed, particularly we got it from the Fed last week, they got very specific about when they're going to stop in terms of those asset purchases, right? We got a time frame, and that does reduce liquidity in the markets.
Yeah, well, what changed, Taylor, is a 24 basis point move on the 10-year yield. That's velocity.
It's the second derivative, our favorite. It is rate of change. Yeah. It is duration and convexity all in one. We do that really across the board here. You had a 7-year auction that was mediocre after a pretty weak 2-year auction yesterday. And you take a look at where we are. You're up 2, 4, 6, 10 basis points if you go out on the long end, and that's just on the day. I mean, you're now up 18 to 20 basis points, Sonali. Since the Fed had their meeting on the 10-year, we were at a 130. So you're now back up to a 154 in just a matter of 4 trading sessions. But what was interesting when we think about the velocity, this 4-day move, that's the most since January. So you are getting sort of this significant maybe repricing.
Now, it's so interesting because it makes you wonder, are we in a space where we're in kind of February of last year where there's more pain ahead, or is this a one-off, right?
But we're in a very different position. Ira Jersey kind of talking about household balance sheets, right? They're in a much better position than they were a year ago. Corporate balance sheets, we've seen a lot of raising of money. So it's hard to say that it's the same thing when we saw yields go up before just recently, that it's a very different situation.
How's the Treasury's balance sheet doing right now?
Well, they're getting ready to reduce it a little bit.
October 18th, right? That's the date?
Yeah.
That is some of the conversations, Tim, that we've been having about any worries in the stock market about the debt ceiling in the past. Of course, in the notes that I've read, Libby Cantrell at PIMCO nails this every time, talking about the market reading through that. But you could argue that that has been maybe some concern that is just keeping investors at bay here.
Maybe, but Carol made the great point earlier. We've seen this play out before, and we've seen this happen before. And hey, this is negotiation. This is what politicians do. They take us to the deadline. And look, we have seen government shutdowns in recent memory, but we've gotten through them, and this could be a negotiation tactic.
Yeah, is there an infrastructure plan that's trying to get through Congress? I mean, this is politics at play, and whether it's Democrats or Republicans, they've all played this card in terms of the debt ceiling, Romaine. And so I feel like, do they want another default? Do they want to shut the government down? I would think not.
Well, yeah, I mean, we would hope not, but of course, we saw what happened a few years back. Of course,
it can happen.
With the big downgrade. I do sort of wonder, though, whether the politics are just a little bit different this time around, and whether it sort of creates inadvertently maybe that gridlock. Basically, you have people who maybe want to get this done, Carol, but the politics just aren't going to allow them to do it.
I don't know. I would find it difficult to believe that they would let it. I think they'll go down to the wire, which is what we always see, right? How many times have we done this story and they come right down to the wire, guys?
It's interesting. I think we have a soundbite. Of course, we heard not only in D.C. when you talk about politics, but D.C. when you talk about the Federal Reserve and the musical chairs down there. You did have Jay Powell, of course, the head of the Fed, testifying earlier before the Senate Banking Committee and the CARES Act oversight hearing. Take a listen.
We had set a test for beginning to taper those purchases of substantial further progress towards our statutory goals. We haven't met that yet, but as I mentioned, I think we've all but met it on the path that we're looking at. We would continue to add accommodation, not subtract it, until well into the middle of next year. And we think that's appropriate given the strength of the economy. The test for raising interest rates is substantially higher.
That, of course, was Jay Powell speaking earlier. Carol, certainly hearing from him not only last Wednesday, but today, too.
Exactly. Got really a reiteration of what we got from the Fed chief last week. All right, guys, we got to run. That does it for our Beyond the Bell coverage, our cross-platform coverage on radio, TV, and on YouTube. We will see you again, same time, same place tomorrow.